Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Connie Hill, 20 plus year veteran in the financial markets. She is there to help answer your questions. I just heard the opening bell. That means we are up and running, at least with the cash market. But the futures market's been moving around a little bit this morning as well. I wanted to specifically welcome everyone to the webcast today, but very specifically those that just came from our advanced options workshop in Dallas over the weekend, Friday and Saturday. Saturday morning, one portion of that workshop we dedicate to an introduction to options discussion. So I know that some of you have come over from there. So welcome to you. Thank you for joining us. We'll talk a little bit about some of the things that we discussed in that particular workshop as well. So I notice a bunch of familiar names here. Leave your comments in the chat or in the comment section if you're watching this in the recorded version as we get up and started here this morning. A couple of quick housekeeping items that we do need to take care of. One is that everything that we talk about simply for illustrative and educational purposes only. It is not anything that we talk about, not any kind of recommendation or solicitation of a particular strategy or account type or anything else. When we talk about futures and futures options, that trading involves substantial risk. It is not suitable for all investors. Make sure that you read the risk disclosure statement for futures and options prior to considering any trading futures transaction. As we get into this discussion, a couple quick reminders. Again, futures margin is required. You need separate trading authorization to do this. And that futures margin is that initial performance bond and then that maintenance bond that's put up to initiate and maintain a futures position. We'll talk a little bit more about that as we get into this discussion. We're going to talk about, given what's been moving this morning, today, some virtual currency derivatives, including Bitcoin futures and mini Bitcoin or micro Bitcoin futures. So just a couple of quick reminders that virtual currency, digital representation of value that functions as a medium of exchange, but it doesn't have legal tender status. There are special and unique risks associated with trading futures products on virtual currencies. So make sure that you read the NFA investor advisory on that and the CFTC customer advisory on those products. Now, we're going to be using the Thinkorswim desktop software platform, specifically the paper money version of that platform. Not a guarantee of future results out there in the real world. It, however, is a good learning environment. However, it does not do certain things that a live trading environment would do, specifically around the area of fill prices and things like that. Early assignment of short American style options, those types of things. The paper money platform does not handle those. So just keep in mind the differences as you move your practice from paper trading to live trading. Also, one thing to consider is that stop orders on futures contracts behave a little bit differently. In fact, market orders in general, whether it's a buy stop, whether it's a sell stop, that generates a market order, that's going to be treated a little bit differently in the futures world than it is in the equities world. The exchange is going to substitute those market orders for exchange designated limit orders within a protection range, and that is for the protection of the exchange as well as the trader from that standpoint. And in the event of a fast moving market, there is the potential that those orders may get rejected or not filled if the market moves around that protection range. So just some of the things that we need to pay attention to. Let's pop over here to the Thinkorswim desktop software platform and see what's going on really quick. I'm going to jump in. Actually, I want to do this really fast to save that grid, but I want to jump over here to the futures grid and just kind of see what's going on this morning with the equities as we start to see these equity futures up and running. The /ES, the S&P 500 futures contract up this morning. If we zoom in a little bit here, we can see that kind of opened right at yesterday's or the last session's closing price, and seems to be moving a little bit higher here, although doing it with some pretty good momentum. Not a lot of movement yet today, but still starting to move to the upside. NASDAQ a little bit more so. We're coming into the beginning of earnings season. We've got some of the major banks and then some of the large cap or mega cap tech names that are going to be releasing earnings in the next few days. That may be driving some speculation in the tech-heavy NASDAQ space in general, and in the /NQ and /MNQ futures contracts in specific. We take a look at the Russell 2000, and it was up a little bit more this morning, starting to fade back just a little bit, coming off of those highs, so maybe a little bit of price discovery. Nevertheless, that's 1, 2, 3 instruments that are all generally moving higher here. Now, I'm going to stick right here. I'm going to use this grid, and I'm going to go to /CL. We're going to take a look at what's going on in crude oil at the moment. This has been the contract that I think has generated perhaps the most interest, if you will. Not interest in the sense that it's paying money, but interest in terms of inquisitive discussion about what's going on in the energy complex. And we see that crude oil down today, almost 4%, down, sitting at around the $95 a barrel mark on the light sweet crude West Texas Intermediate, the /CL contract. /BZ, the Brent crude market, down as well, not quite down as much. Intrigue, I like that, Carol. Thank you. That's good. I like the intrigue. But up off of its lows, kind of giving us a spinning top type of candle here. Momentum falling off a little bit in terms of the RSI. So Brent crude a little bit, perhaps less weakness, more equilibrium than /CL. Some of the other things in the space, for those of you that are considering road trips or anything else, /RB. The gasoline contract down a little bit today, but not significantly so. Coming back in lower than some of those highs recently. For those of you that travel a lot, /HO. And this is what's having the big impact on diesel fuel prices, on jet fuel prices. And you can see that while that has been coming down, it's down net about 1% today. The contract's starting to pick back up a little bit of pace here, testing a little bit higher, maybe finding perhaps a little bit of a support level. Not that that's necessarily going to change the price of an airline ticket or change the price of diesel fuel at the pump, which is still pretty significant. Taking a look in the metal space, /GC. I want to come back and take a look at this really quick. Gold, let me kill some of those numbers here. Gold, in this case, moving a little bit higher today, up 1.13% with a little bit of momentum, approaching that 50-period moving average here, /SI. The silver space moving higher significantly as well. And this may have more to do with things like industrial movement in the battery space, industrial movement in the chip space. All of that tends to be consumption driven for silver. The housing space, /HG, maybe in an indication here. Gold is up a little bit, Carol. But copper futures up significantly in the last few days, and starting to see that move significantly higher here. 1.62% today. We're going to take a look at this in just a minute as we look at maybe the /MHG, the micro contract. /DX, we'll take a look at the dollar contract. And again, so to Lawrence's point, dollar down, that's likely one of the reasons why we're seeing that influence in the metals space primarily. This dollar down normally tends to drive crude oil prices up a little bit, but so if the dollar were up, we may see that crude oil price a little bit lower, in this case kind of figuring out that relationship here. So we'll talk about that as we get into this discussion. Thank you, JV Texans. Good to see you as well in that discussion. So let's pop back over here real quick. The other thing that I want to look at with /VX and kind of get a sense of what volatility is doing. Volatility down below its 200 period and well below its 50 period moving averages here in this particular case. And continuing to see that move to the downside. Now, I will tell you this. So while we're on this particular place, this location, this is my just single grid area that I've got a couple of tools on, a couple of different moving averages and an RSI. But you can do this on whatever chart that you want to see. But you can go to the drop-down box over here. Let me grab my, hang on a second, because I'm getting people telling me they're not seeing the cursor. So let's come over here. I'm just going to put this little spotlight on it so that you can see that spotlight. So right here in this drop-down, if you click on the drop-down and you go to the Futures sub-tab, then you're going to see all the futures contracts that are available. We've talked a little bit about the idea of that some of the contracts that trade on the ICE exchange require that data feed in order to be able to do that. That's something that you can do through the trade desk by giving them a call. But you can start to scroll down through some of these lists and see what is available. And that's kind of where, you know, my daily routine goes, into these contracts and starting to see what is moving a little bit. Let's take a look at this one here really quickly, /MBT. MBT starting to break to the upside here. We're going to come back and look at that a little more closely in just a minute, but I'm going to continue to come back through this list and start to scroll through these lists. So we can get into some of those more esoteric. We can get into some of the agricultural names here. There are some other metals names that we might scroll through here and take a look at. So we've got silver, we've got gold. We do have, in some cases, I think we do have platinum and palladium. And I don't know that we've got lithium futures that are listed. I was just looking for them real quick because somebody had asked me about lithium futures. I know lithium futures are traded on the COMEX, but they are not listed in terms of what we have available to trade. But we do have things like platinum and palladium futures as well, so you can see those contracts here if you want to look in that battery space. So in looking at some of the lithium spaces, that's where a trader using futures contracts might then start to look at some of the indexes or some of the individual names that trade those particular areas. So let's do this. I want to pop over here real quick to our monitor tab. I want to take a look at a couple of the positions that we currently have on. One is this 1 ounce gold futures contract, and we are long one contract here. Entered into the trade, initiated the trade when the contract was trading at 46.71. It is currently trading at 48.14, kind of bouncing back and forth. Our initial margin fairly low because, remember, this is a 1 ounce gold futures contract. So the notional value of this contract is this 48.15 because it's talking about 1 ounce of gold. So that is essentially, this is about as close to trading the spot price for an ounce of gold as we can get without trading spot or melt or one of those other prices, which becomes a little bit challenging. So trading the futures contract here, this is a 1 ounce futures, kind of the smallest decrement of that contract size. So we are up a little bit in this contract. We're going to leave that one going since gold does seem to be moving a little bit higher here. The other position that we have on is this calendar spread on the micro crude oil contract. Now remember, the micro crude oil contract is 1/10 of /CL, 1/10 of the big contract. But the idea here is that we are short the shorter dated contract, and we are long the backdated or longer dated contract. The expectation here is this, and let me grab my magic marker just so that we can see this. So because we are short the front dated contract, our expectation is, since we basically initiated this calendar spread when that short position was currently trading at 113.12. It is now trading at 95. That's done exactly what we wanted it to do. We were short contract, so we wanted the short leg. I'm just going to do S for short. We wanted that to go down in price, right? Sell high, buy back low, right? Sell high, buy low, sell high. We're just doing exactly the same thing, just reversing that. So the one that we're long, the one that is, I think this is the September contract, we initiated this position when that was trading at 74. It has now come up in price. It's gone to 76. So we bought that one and we wanted that to go up. And that's exactly what has happened over the lifespan so far in this particular calendar spread. So this calendar spread is working for us. It's doing what we've expected it to do. And in fact, today it's continuing to do what we expect it to do, with crude oil continuing to move to the downside. So in this calendar spread perspective, we're not necessarily trading either one of these individual names. We're trading the relationship between the two. We want this one to get, we want the one that we're short to get cheap, and we want the one that we're long to get more expensive, right? So that's the relationship that we're trying to benefit from here. So what we're going to do in this case, now this may hopefully address a couple of people's questions. Notice that this contract, the one that we are short, has 6 days remaining till it expires and now rolls to the next contract. So what we need to do is we need to know what the contract specs are in terms of that roll and what's next for the one that we're short. So one of the ways that we can do this, and I think this is hopefully helpful to some of you in terms of seeing futures contract information, is this. I'm going to go to the Analyze tab, and I'm going to go to the Fundamentals sub-tab. So I'm on the Analyze tab, and then the Fundamentals sub-tab right here. And then I've put in /MCL. Now, the cool thing is I can get this information for any contract that's available here on the platform. I can see the contract multiplier, I can see the tick value, I can see the minimum tick increment, I can see what those options on that contract settles to. So these are cash settled options on the futures contracts. But I can also see the trading times, and then here's the important stuff. When it comes to the information that we need about this futures contract, I can see the number of days remaining in that active contract. You can see that the Thinkorswim platform will always flag the most active contract, and it'll show me bid-ask spread. Now, it won't show me in this particular case volume being traded or open interest being traded, but it will show me the last trade date, and it will show me the initial long margin and short margin for this contract. So what I need to put up to enter a position, and that's gone up a little bit as that volatility has increased. You can see as the volatility is lower in those back month contracts, the initial margin is lower for those back month contracts. But the last trading date for this contract is essentially 6 days from now. Now, that roll process is already starting to happen. So active traders are rolling from the May deliverable to the June deliverable. Now, one thing to notice, sometimes you will see this first notice date. That first notice date refers to physically deliverable contracts. And because the Thinkorswim platform and the brokerage doesn't allow physical delivery in physical delivery contracts, that's listed as an NA in this particular case. So we're not going to worry about that first notice date. But one of the things to think about is that kind of 5 to 10 days prior to this last trading date is about the time that traders start to roll to the next contract. So we're now coming down to 6 days to go until the expiration of this May contract. So what we're going to do is I'm going to go back to my monitor tab, and we're going to look at managing this futures calendar. And the idea is, once again, we want to stay, because my expectation is that we're still going to see the front month crude oil price drop, but we may see in the longer term that longer dated contract rise. Now remember, we've already, in terms of where we initiated this position to where it is now, we've already accrued some profit, unrealized yet, but some profit in this trade. We'll call it potential profit because it's unrealized. So what we're going to do is we're going to roll this MCLK, which is the May contract, into the June contract. We are short that contract right now. So in order to close that position, because remember, a rolling trade is very simply closing one and opening another. So what we're going to do is we're going to close this one. How do we close this contract, the /MCLK 26? We buy it back because we're short it. How do we initiate another one? We go short the new position. So what we're going to do is we're going to use one of the tools that the Thinkorswim platform gives us, which is a very helpful tool, and that's what's called the position dissector. So what I'm going to do is I'm just going to right-click on this position, and I'm going to go to Create Rolling Order. Now, I know because of my letter designations, and what I ultimately want to accomplish, that this is the choice. I'm going to be closing my /MCLK, and I'm going to be opening a short position in /MCLM, which is the June contract. K is May, M is June. So I'm going to be buying a calendar spread, just rolling it across that contract expiration time frame. So I'm going to select that to create the order. So you notice that here's what I've got. Let's see what this is. So remember, I'm short the K, and I want to be short the M. So in order to be not short the K anymore, I've got to buy it back, and then I got to sell the M contract. And that's what we're doing. Now, this is going to result in a net debit, because at the moment, there is a difference between what I'm paying for the buyback on the K contract and what I'm able to realize in selling the M contract. Okay? Yeah, I can roll to whatever month I want to, not just the next one. However, wacky, one thing to keep in mind is as I'm rolling active to the next active. If I'm rolling to another contract that's not as active, I may have to deal with lower liquidity in that contract. So this is something that we want to pay attention to. But remember, I've already created a calendar spread. I'm short the K and long the Z. So in and of itself, that was already a calendar spread. Now what I'm doing is I'm just using another calendar spread to advance this short contract forward one expiration. So I'm going to pay a little bit to do that, but I've already realized a profit or potential profit in this trade. So we're going to click on Confirm and Send, and we're going to read through this order, make sure that that's what I want to do. I want to buy this in this particular case, and we're going to put this in our futures group, and we're going to click on Send, and we're going to fire that order off. And because we're talking about crossing two different bid-ask spreads, that may take a little bit. Now we got filled at 4:30. And so what we've done is we've pushed this front month. Let's go back to our futures and let's take a look at this /MCL. Now we are short the M and we are long the Z. Short the M, long the Z. And we took a little bit of cash out of that for doing that roll, because if you think about it, we initially put that trade in when the K contract, the one that we are now out of, when that was trading at $113, and we bought it back when it was trading at $95. So we took a little bit of cash out of that roll. Now we're still benefiting from the difference between the price on /MCLM and /MCLZ. That makes sense? Okay, all we did is we rolled the front month of the contract. It's kind of like in the options world of rolling the short leg of a diagonal spread and leaving the long leg of the diagonal spread alone. That's essentially what we've done. Now, trading options, remember that's not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before trading any options strategy. So one of the things to think about here is the nature of the futures contract is something that has to be paid attention to. You've got to pay attention to the expiration dates. So now what we've done is we've extended the duration here in our short leg out to about 34 days to go until expiration. We still have 219 on our long leg, still trading the difference between those two, trying to take advantage of that movement. All right, let's go back over here to our charts tab. And I want to change my grid here really quickly to my futures grid. And we're going to grab that futures grid. A couple of things that I wanted to look at here. Let's take a look at /MHG. So one of the things that I'm looking for in this particular case, this is the micro copper contract. I'm going to make this side a little bit bigger here. So what we can see is what our tick size is, our tick value, our point value, and our notional value of the contract. So 0.0005 is our minimum tick size. That means that this significant digit here, 4 places past the decimal point, is going to increment or decrement in amounts of 5. So it's going to go from 0 to 5, 5 to 0. You're not going to see a 1 or a 2 or something other than a 5 or a 0 in that position. But our tick value, every time that moves, that's $1.25. Which means that if you were to count all of those up, every time this point moves, every time this moves from 6 to 7 or 6 to 5, that's going to be a point value change of $2,500. Right? So that means take that $2,500 times that price. That's going to give you the notional value of the contract. So just so we've got that in place. I'm going to do this really quick, and I do this every time. I'm going to go ahead and share this grid with that label so that you've got it. It's going to be out here in the chat. And remember that anything that we share is for illustrative and educational purposes only. And that is simply an illustrative and educational example. But it's also, for those of you that are watching in the recorded version, I've put that in the description of each one of these futures webcasts so that you can go there and you can grab that grid. So here's what we're going to look at in terms of entering this trade. What I'm looking for is a break back up above this resistance level. It's kind of bled up above it. I've got the ADX on here, which is a trend strength gauge. That ADX is a little bit weaker trend strength at the moment. So this was, for some technically driven traders, maybe a false breakout, kind of bleeding back down below that level. So I initially was looking at getting into the trade here, a break above the 6.082 mark. But you know what I'm going to do? Is I'm going to come back here and I'm going to say, look, I want to get in if price moves back above this we're going to call it 6.0. I'm going to call it 6.089 or 6.090. Okay. So that is a challenge. So I want to address James's question here really quickly. Is there any advantage to first closing the short and then opening another short? So you're doing the same thing. You're just doing it in 2 steps. So in one order, buying back the short position and then leaving it there. And then in another order, selling the next short position and initiating the new position. No, there's not an advantage really, and there is in fact a little bit of a risk in that if the first order gets filled, now you're left with that long back month position, and so that exposes you somewhat to position risk. because now the market could move in between the time that you closed the short position and you initiate a new short position. And so if the market moves, it means that you might be getting in at a different price. It's primarily a matter of convenience, really, in terms of putting that trade together as a rolling order as opposed to two separate orders. You can do either one, but there may be a matter of convenience in that case. So what I'm going to do is I'm looking, here's the expectation in this particular case. I'm looking for this to continue to move higher, right, and continue to break out. This is going to be my entry price right here. Okay. My stop, in this case, I'm going to look at putting a stop on somewhere below this level. So that's going to be my stop. And then my target is going to be some distance higher, in this particular case, looking to take that breakout, if in fact that is a breakout. Now, one other thing that we could add to this would be a move on the ADX above the 25 level to give us some indication and confidence that trend strength is coming back. But I'm not going to complicate that with this trade with that at the moment. So what we're going to do is I'm going to put this entry into this trade. Before we do that, I'm going to pop back over to this other side. And I'm going to say, look, where is our maybe next level of resistance overhead? Maybe that next level of resistance overhead is somewhere up here around, on this copper contract, up around 6.27 or 6.30. So I'm going to come over here and I'm going to say, look, where do we have to go to get to that level? There's our target in this particular trade. So the way that we're going to put this trade together is we're going to look at entering here. So I'm going to do this. I'm going to do a buy custom with OCO bracket. And we're going to enter the trade on that move above. I'm going to make it 6.090, enter. And that's going to be at a buy stop. Because if I were to put it in right now as a limit order, that's going to fill theoretically. So I'm going to put this in as a buy stop order at that price. It's going to say stop, wait, don't do anything until we get to that price move to the that move to the upside. Now, let's look at our target. So this would be selling it at a limit price. Limit says at this price or better. So where is our limit price going to be? 6.280. 6.280 is going to be our limit on the upside. 6.280. And that's going to be our exit. We'll make that good till canceled. And then we'll squish this back down so that we can see it. And our stop is going to be somewhere right around here, 6.065, we'll call it. And we'll come back, we'll bring our order back up again. We're going to make this a stop, 6.065. 6.065 is going to be our stop price. Now remember, that's going to get worked as a market or as an exchange designated limit order. And so we're going to put this order out there waiting for that break to the upside. I'm going to go ahead and click on confirm and send. We're going to see that our initial margin requirement for this trade is $1,320 for this micro contract. We're going to put this in our futures group and we'll see if that order fills for us while we're talking here. If we do get that breakout. Now, one of the things that we could do is do a conditional on there and a study conditional based on that ADX that says, all right, here's the order, queue the order up, but don't submit that order until you get the buy stop condition and you get an ADX above 25. So those are some of the things that you could use to maybe make this a little bit more complex order. Speaking of complex, we try to make these things a little easier, but we've got a survey link out there in the chat. Help us to make these webcasts better for you by filling out that survey. Connie will pin that to the top of the chat for me, and she'll repost it a couple more times. But help us out. Let us know what you think about these webcasts, and we'll see what we can do. All right, let's take a look at this one right here. This is /MBT, and this is Bitcoin. And Bitcoin had started to break out, and in fact, as we were talking about this morning, talking about those virtual currency futures. Um, so in this particular case, looking for the move, the breakout here, and looking for this to target right around that 81.60. So that's a fairly decent move, but it's driven by levels of support and resistance. So we're using technical analysis to make that determination here. So this was kind of my threshold. And while we've been talking, this broke up through that threshold and continued to move higher. So what I'm going to do, since it's pulling back a little bit here, is I'm going to set this trade up by drawing a line of resistance right here. I'm going to use this little bit of a pullback here as my stop, and then my target overhead is going to be up here at about that 8100 mark. So that's how we'll create this trade. So we're going to use this as a buy stop. We're going to do the same thing, buy custom with OCO bracket, and we're going to make this a buy stop that says, fine, stop, wait, don't do anything until we get above 75,820. 75,820. And we're going to make that a day order. We're going to use our stop here at 75,395. 75,395.00. I'm going to make that good till, actually, that's not my stop. That's my target. 75,395. Let's do this. Thanks for catching that. 395.00 is going to be my stop. I almost did the same thing that I did last week in getting those two orders wrong. Good idea to read the freaking order. 8120 is where we're going to get out. 81,200. 81,200. So let's bring that up. And let's make our limit price here to get out 81,200. There we go. And we're going to make that good till canceled as well. All right. There we go. I just changed that. Okay, now we've got it correct. All right, here's our buy. Here's our limit to sell. Here's our market stop to sell if it goes down. So our copper trade just filled. And let's see what happened there. Let's confirm and send this one. Read through it. Our initial bar margin, and this is 1947. Let's go ahead and click on send. Oh, we got to put this in our futures group. And let's send that order off. And that filled because we just got that breakout above. Yeah, okay, so RB Tech Trader says, what's the reason for expecting the price to get to 8120 or 81,200? That's at next level of resistance. We've got this little bit of a cup and handle type of pattern here. Next level of resistance overhead is the edge of that gap. That's what I'm going on, is that 81,200 is the next level of resistance overhead. That's the reason why I'm expecting the price to get to 81,200. Is I'm looking at this purely from a technical analysis standpoint. We've got momentum moving to the upside. We've got a breakout of a resistance level on a cup and handle pattern, and the measurement objective of that pattern matches up nicely with that resistance level. Let's take a look at our /M HG trade that just went off. Okay, we are in. So we got into the trade. Now that is sitting as an active order. We're looking for that move to keep moving to the upside. That was our trigger to get into the trade. So here's what we've got so far, guys. We've got our gold contract that's working for us. We adjusted our crude oil contract. We just got into our Bitcoin position here to the upside, and our micro copper futures contract moving to the upside as well. So some things moving here. But I noticed some people said, hey, crude oil is moving down a little bit. So that could be potentially working. So we initiated that roll. We are now short the MCL, the micro crude M contract, which is the June deliverable. We're short that contract, and we essentially created that short position with a price of $90.47 a barrel. And we're now seeing crude below that, now down at 88 cents a barrel. So here's the thing that's happening. Notice what's going on. I want to just kind of highlight this real quick. And this is the benefit of trading this a potential calendar spread where we're taking advantage of two different prices, is that the price of the contract that we are short has gone in the direction that we wanted it to go, which was down. The price of the contract that we are long, the MCL Z contract, has gone up and is still continuing to go up. And that's exactly what we want to have happen in this scenario. The backdated month is going up. The short-dated month is going down. That spread is getting narrower, and that's working in our favor. In fact, we've added a little bit of unrealized gain in that position, not just from taking cash out from that roll, but also from that movement. So we're trading the relationship, not just the absolute price of one of those contracts or the other. We're trading the relationship between those two contracts. So one of the things that we could do, and I just want to show you this really quick as we wind this up, and then I'm going to show you some additional resources. And that is this. Let me delete that drawing. Let's come over here to our monitor tab. Actually, let's come over here to the trade tab, and let's do /MCL. And I'm going to change these spreads to calendar spreads. So we know that now we are short the MCLM and we're long the Z, which is December. So what I'm going to do now is I'm going to open up this MCLM, and here's the MCLM MCLZ calendar spread. So what I'm going to do is I'm going to right click on that, and I'm going to come down here and I'm going to do more info. I'm going to send that to TOS Charts. So I'm going to pop that in right here. And let's see if we've got that. Okay, I'm going to actually change my chart grid real quick to my single grid so that we can send it there. And so we'll come back to our monitor tab. Or actually, excuse me, to the trade tab. /MCL. Whoops. /MCL. There it is. We're on calendar spreads. I'm going to go to this one. I'm going to go to the one that we are long and short. So that is the M and Z. And I'm going to right click. And I'm going to send more information to the TOS charts. I'm going to put it in that grid. And here is the spread between those two. No, it's not sending me the spread. So what I want to do is let's put this in here. MCL. Let's do this. /MCLZ26 minus /MCLM26. We'll just do it manually. And there is the spread between those two contracts. So we can track that. We can chart that spread and the width of the spread. So we want that spread to get narrower. We want that spread to come together. So we want this to move towards zero. So this moving in an upward direction means that spread is getting narrower. That's doing what we want it to do. Cool. All right, we can see that going on. Now, real quick, before we go, if you want to learn a little bit more about this, come over to the futures trading location on schwab.com, schwab.com/futures. More information about trading futures at Charles Schwab. If you want to find more resources and more recorded webcasts, come on over here to our Trader Talks page. When you do that, click on subscribe, but just type in the word futures. And you're going to get the futures playlist. You're going to get all of those webcasts that have been taught on the futures contracts and futures trading. And this is where you're going to find other webcasts around different strategies and ideas. We'd love to have you join us in those webcasts. Just click on that subscribe button. Again, my thanks to Connie Hill for helping out today. My thanks to our great production staff and to our great reviewers. We appreciate all of the efforts that you go to keeping this going. And thanks to all of you for joining us today. We'll see you back here again next Tuesday morning for another great discussion of futures. We'll see you in a bit. Take care, everybody. Bye-bye.